Bookkeeping for your Amazon FBA business. Are you doing it? If you're not, you need to start doing it today because it's one of those things that you cannot escape from. You have to pay taxes to the IRS or to your CRA or to your local government, and when you pay your taxes, you need to get your books cleaned up. So what I wanted to do is invite one of the services. Their name is called CapForge Accounting, and I personally use them for all my bookkeeping services. Very affordable, very professional. So I invited the owner of CapForge Bookkeeping and Accounting to hop on a call with us, and he went over 5 different tips and mistakes that most Amazon sellers will make. Now look, this interview is about 40 minutes long. I can make you one promise, and I never say things like this. If you implement these 5 different things, I know it's dry, it's accounting, it's bookkeeping, no one wants to talk about it, but you have to do it as an Amazon FBA entrepreneur and business owner. If you actually implement these 5 things, I can guarantee you that this video will save you tens and thousands of dollars. And when you do, send some Uber Eats my way, get me some Chipotle with guacamole. That's how you can thank me. But stay tuned because this video is action-packed. It is a little bit dry, but you gotta do it, okay? So make sure you get it done. And one more thing, guys, if you're new to the channel, my name is Tom. I'm an 8-figure e-commerce entrepreneur based in Vancouver, BC. If you're interested in entrepreneurship, lifestyle, and just generally improving your life and your lifestyle, income, health, wealth, whatever it might be, hit the subscribe button. If you enjoyed this video, hit the thumbs up. Without further ado, let's go into the interview. Hey, what's up, guys? It's Tom here, and today we have a special guest. His name is Matt from CapForge. They are a bookkeeping and tax service company, more focused towards e-commerce businesses as well as Amazon FBA businesses. Very specifically, they work with over 500 Amazon FBA sellers. And what I wanted to do, and I'm one of the clients of Matt, and that's why I wanted to bring him on board. Bookkeeping is one of those things where nobody wants to do them, but you have to do them, or else the CRA or the IRS will come knocking on your door, and you don't want that to happen. So it's one of the first things I outsourced in my business because let's be honest, there's so many places that you have to spend when it comes to running an Amazon FBA business, and bookkeeping, it's not one of those places I want to be spending. So I pass on my business to Matt, and the services and the results that we'll be getting are really, really professional, very, accurate numbers and whatnot. So I thought by bringing on Matt, it will benefit you guys. And we're not saying, hey, you need to go with Matt right away. Obviously, there's a monthly investment with that. But what Matt wants to share today with you guys are the 5 mistakes that he sees Amazon sellers making all the time in bookkeeping, doing their own bookkeeping, so that you can learn these 5 mistakes. And if you want to do them yourself, you don't need to make those 5 mistakes. So Matt, welcome to the interview. Hope you're doing well today.
Yeah, thanks for having me. I'm looking forward to this. It's fun.
Absolutely. So Matt, maybe I know you have a presentation on your PowerPoint. Do you want to just maybe pull that up and we can start running through the presentation?
Yeah, let me jump into those slides. I'll share, make sure you tell me you can see the screen here, and I will get into this. So here we go. Here's the slides.
Perfect.
And all right, so you can see this okay?
Yep.
All right, so here's the 5 mistakes sellers make with their Amazon accounting. And this is stuff we see over and over again with Amazon sellers that come to us from various sources where they are making these mistakes, and some of them are pretty tactical, some of them are more high level, but ultimately all of them, the common theme is they hurt your business. And obviously you're spending a lot of time, a lot of effort, a lot of money to do this business well, to be profitable, to grow, to maybe have a successful exit. And these mistakes are all ones that are holding you back from that. They're holding you back from being as profitable as you can, from being as successful as you can, and from exiting at the top value. So I just wanted to point them out. I'm going to go through it pretty quickly. I'm sure Tom's happy to share these slides with anyone who's interested. And I always say, if you've got more questions, I'm happy to address them. But let me just go through them pretty quickly so that we kind of know what we're talking about here. So here's the topics. First off, not having bookkeeping. Second off, using cash versus accrual in your bookkeeping. Third is whether or not you're an LLC or an S Corp. 4 is doing a profit review by SKU, not just on a high level. And fifth is wrecking your enterprise value by doing any of the other four things wrong. So let me jump quickly into that. I've got a little intro here, but Tom kind of already covered that. I've been doing this a long time, and we definitely nearly 80% of our business is online Amazon sellers. So this is really our single specialty. It's what we do every single day, all day long. All right, so first mistake we see clients making, and I would think, you know, or I would have thought if you'd asked me, this is just newbies kind of just getting started. They don't have their bookkeeping set up just because they haven't gotten around to it, which is understandable. Bookkeeping is something that falls to the bottom of most people's lists of things they want to get to, right? It's much more exciting to get your product listed, start seeing your first sales come in, start seeing some revenue. Bookkeeping isn't something you have to do from day one, but you do need to get it done. But I've actually had sellers call us up and say they're seven-figure sellers, and they're like, we don't have any bookkeeping yet. So as crazy as that is, we see that happen. So really, as soon as you get started, you want to have a plan for doing your books. And there's a number of reasons for it. A lot of people think, well, I just have to do books so I can pay taxes once a year. But really, there's a lot more to it. First of all, it's kind of the way you keep score. Are you winning or not? Are you profitable or not? Without good bookkeeping, that's going to be really hard to determine. Finding holes, places where there's opportunities to do better, or plug holes where you're, you have more expenses than you want. Without bookkeeping, it's really hard to know where those things are. Obviously, getting straight with taxes, make sure you're paying the lowest legal amount. The only way to do that is with good bookkeeping. We had a client come to us with a $75,000 tax bill. The IRS said, hey, we think you screwed up. You owe us an extra $75,000. Well, we hadn't done their books, and we hadn't actually helped them out on that until they came to us. Once we did, it turns out not only did they not owe $75,000, we got them a $72,000 refund. And that's not any magic that we do. It's just because his books were all screwed up. So that's a $150,000 swing from positive to negative that are all related to just having good books. Also, you know, if you're interested in getting a loan, being able to grow your business with financing, you need to have good bookkeeping. And then if at the end of the day you want to sell the business, it's going to entirely rely on having good financials to present to a buyer. So there's a bunch of reasons to have bookkeeping aside from just paying taxes at the end. And not only bookkeeping, but doing it correctly.
I just want to sorry to interrupt you, Matt.
Sure.
I just want to back up a bit. Like, first of all, what is bookkeeping, right? Bookkeeping is literally just in your business. When you run your business, you got transactions coming in. So Amazon pays you, your customers pay you, and you got transactions going out. You're buying your samples, you are paying for your suppliers, you are taking your team out for lunch. So bookkeeping is simply just a record of all those transactions that are going in and coming out. Because once you have that record, you can essentially know if your business is profitable or not profitable. So I just want to kind of put that out there first. And yeah, for those that don't know really what bookkeeping.
No, 100%. I should have started with that, but it's
okay.
one of those things. I do this all day long every day, so I kind of forget how many steps back to go to the beginning. But yeah,
it's like when I teach Amazon FBA, I'm like, yeah, Amazon FBA. People are like, what the hell is FBA? Like, what does that stand for? I'm like, oh yeah, like fulfilled by Amazon. Yeah.
Right. So
excellent
point. Bookkeeping is a record of all the transactions that happen in the business, incoming and outgoing. So there's bookkeeping software out there that you can use to keep track of this. And my recommendation on what not to use, obviously don't use nothing, but also Excel, Wave, FreshBooks, GoDaddy. Those are all partial solutions, but they're not great. And kind of starting with the wrong solution just means you're going to have to switch to something legitimate afterwards. So my suggestion is, if you're going to do it right from the beginning. Either QuickBooks or Xero. Those are the two accounting programs that 99% of sellers are using. They do accounting right, but they're also budget friendly, and they're not too complicated. There's also, too complicated solutions that are overkill for what you're doing. And some people say, well, QuickBooks is kind of for small business, right? I plan to be big. We actually have a seller doing over $100 million a year revenue
Wow.
still using QuickBooks. And it's not because it's not the size of the number, it's the complexity of the business. The business is pretty straightforward. QuickBooks can handle straightforward accounting. So even though there's a lot of zeros on those numbers, QuickBooks is still fine. Another solution we've seen people use is Bench. That's a service that does it for you. Nothing against Bench. They do a fine job. They're actually located up by where Tom is in Vancouver. The only downside of Bench is they only do cash-based accounting. And for being an Amazon seller, you really want to be accrual. And I'm going to get into that in a minute. But so Bench is not a great choice. And also a lot of people have heard of A2X and they go, oh, A2X is this great software that pulls my Amazon data into QuickBooks. It does everything for me. It's a no-brainer. I don't really even have to know accounting. It'll help me out. The problem with A2X, and again, not to knock on other people's solutions, but what I want to point out is A2X doesn't get it exactly right. They use the Amazon API, which in itself has some issues. And so you can see a comparison here. On the left is a profit and loss done by a client before we got to them using A2X. And then on the right side there is their same month Amazon summary statement. And what I'm highlighting here is a bunch of the numbers are different, but the big one that jumps out, right, is A2X reported sales of 306,000. Amazon reported sales of 295,000. That's a $9,000 difference, right? Or no, sorry, $11,000 difference. That's not nothing, right? If you're basing your profits off what A2X is telling you and they're making mistakes, and it's not always in your favor, sometimes they underreport too, right? And you're trying to judge your profitability by numbers that aren't exactly right. Well, that's a problem. So this is why we don't recommend using the A2X software, at least not if you don't know how to go in and double check it and make changes on your own if you're not getting exactly the right numbers. And I don't, their numbers are decent. If you're not doing anything else, A2X is definitely better than nothing. But if you're trying to get spot on accuracy, A2X is not getting it done there. All right, second thing, cash versus accrual. And here I don't want to get into a lot of accounting jargon. So this is as jargony as I'm going to get. But there's two basic ways to do bookkeeping. There's cash, which is basically, here's what happened today. In my checking account, I got these deposits. Account, I paid these bills. And it's just in and out, very simple. And the nice thing is it kind of looks like what your bank account looks like, so that's handy. But it doesn't really help you manage your business. What you really need to do to manage your business is match your sales with your expenses. And that's all accrual means, is we're not looking at the timing of when money comes in and out. We're looking at, we're not looking at the actual money in and out in the checking account. We're looking at what's happening in the business. And essentially what we're saying is we're matching the sales that happen in any given month with the expenses for any given month. So let me give you an example on the next page here that hopefully makes it a little clearer and why we really recommend doing all your bookkeeping in accrual versus cash. So here's month one on the left, month two on the right, cash on the left side versus accrual on the right side. Like I said, cash basically just shows you what happened in your checking account. All it shows you from a deposit side is what Amazon dropped in your bank account. But what Amazon drops in your bank account is after they've taken out all their fees, which is up to 30% or sometimes even over 30% of what you earn. So right off the top, you're getting a big haircut on what your sales were. And then when you go to buy inventory, if you're doing cash basis, that giant inventory you bought that may last you 6 months, you're taking that entire expense that month, even though most of that stuff is still not even into the warehouse yet, never mind sold. You're showing that expense the month you paid for it. So what happens is in 1 month where you buy inventory, it looks like you're negative profitability. You lost money that month. What happened? Then the second month, when you don't buy inventory, in month two, cash basis, you get your deposit, you have no expenses for any products you sold, and you look wildly profitable. And you go, oh, why can't I do that every month? So neither situation is really a good reflection of what happened. On the accrual side, you can kind of see more clearly how we do it. We show your total sales, everything Amazon collected for you, even though you're not getting it all. Then you can see how much you're actually paying them in fees and hopefully keep track of it, make sure it's staying about where it should every month. And then you see cost of goods sold, which is not all of the inventory that you bought that month, but only the amount that counts for the SKUs that you shipped that month. And again, you want to target a profit margin with your cost of goods sold somewhere hopefully less than 30%. It depends on the product you're buying and the price and so on. But you really want to track that, because where we see most clients end up hurting their own profitability or losing track of their profits is the cost of their products. So with accrual accounting, you can see apples to apples, month to month, what's going on with your sales and your profitability and your other expenses, whereas cash doesn't give you that picture at all. So that's why we recommend accrual accounting. It takes a little bit more time, but it's much, much better at helping you compare profitability month to month and all your expenses month to month, apples to apples, versus cash, which is just all over the place.
Yeah, guys, and I think, correct me if I'm wrong, even when you go sell your business, it's much better based on a valuation point if you're under accrual than cash.
100%. In fact, a lot of the brokers won't even list your business until you've done your books in accrual, because it hurts the valuation that much. And real quick story on this, we had a couple of years ago, a client of ours bought an Amazon business. It was a cash basis business that he based the valuation on. He bought it. He hired us to redo the financials in accrual, and then he put it back on the market. 30 days later, he sold the same business for $100,000 more. Literally, the only difference was how the books were done. The business was exactly the same. Obviously, in 30 days, he hadn't done any magic to the business to make it, do more or sell more. It was strictly the difference between cash basis valuation and accrual based valuation that got him an extra $100,000. And obviously, the guy he bought it from felt like an idiot after he found out. But that's the difference. To sell a business for maximum value, you've got to be on accrual basis. All right, let me jump ahead here. And again, I know these are, somewhat complicated topics, so I'm happy to, answer questions after the fact, by email or phone call or whatever. And I'm also happy to give you guys a free copy of our book on Amazon seller bookkeeping, so you can do it yourself, and it explains literally step by step how to do proper accrual bookkeeping in your own business so you can get it right. So here's a little bit more. We kind of just went over this, but if you've got somebody already doing your bookkeeping and you're not sure if they're doing it on cash or accrual, here's a couple of quick ways to check. Seeing if deposits are being recorded, just what you're getting from Amazon, not your total sales, or if all the inventory purchases are showing up as expenses instead of keeping it on the balance sheet and just doing an actual cost of goods sold, or if there's an accounts receivable balance showing up for what Amazon still owes you, that would be an indication of accrual. So if you're not sure if the person doing your books, if it's not you, is doing it right, here's a couple quick things to look at. If you're still not sure, I'm happy to take a look at your books, no cost, no obligation, and just say, hey, here's what's going right and here's what's not going right. So you can take it back to them and say, hey, I want to do these things differently. All right, third thing, LLC versus S Corp. And this is, if you're in the US in particular, the S Corp option is available. If you're not, so when should I be an LLC? When should I be an S Corp? And by the way, on our blog, there's a 2,500 word explanation that goes into all the detail on this. But a lot of people, for whatever reason, they hear the advice, hey, I should be an LLC for my Amazon business. Yes, maybe. Yes, if you have a foreign owner, either 100% foreign owner or a foreign-owned partner who's not a U.S. citizen, then you definitely need to be an LLC. Or if you've got unequal partners, one person's putting in sweat equity, the other person's putting in a lot of the money. In that case, an LLC can work better. Or if you're in the U.S. and you're just set up as an LLC and you're the only owner, maybe you just like paying a lot of extra taxes. I don't know. I would look into it though. But why be an S Corp? If you're in the US and you're the only owner, or you're a married couple, or you're 50-50 partners, And especially even more so if you're paying for your own health insurance, which a lot of our people who have gotten to be, you know, where their Amazon business is their full-time gig. It's not a side hustle anymore. They're not still working a W-2 job. Now they're having to buy their own health insurance, not like Canada where you guys get that taken care of, which is awesome. But in the US here where we have to buy our own, you're going to pay a lot less tax if you can end up being an S Corp. We've had people save $10,000, $12,000 just by making that switch from LLC to S Corp. So it's one of those things, for whatever reason, there's a ton of advice out there. Oh, set up as an LLC, it's easier, it's cheaper, it's faster. But it ends up costing clients literally tens of thousands of dollars. And every year we convert a ton of clients from LLC to S Corp, and just right off the bat, save them a ton of money. So if you're an LLC, you're in the US and you're looking at these S Corp bullet points and thinking, yeah, that's me, you know, again, feel free to reach out or talk to your CPA or do your own research. But a lot of the time, an S Corp is going to end up saving you quite a bit of money over LLC. Literally, again, it's the same business. It's nothing else has changed except you've made that S election and you end up saving a ton of taxes. So just a quick free win that you can pick up. And the bigger you are, the more you save. All right, fourth thing we see a lot of clients overlooking. As you may or may not know, or you figure out as you go along, Amazon tends to be an 80-20 or even 90-10, 95-5 sometimes case, where a handful of your SKUs produce the lion's share of your sales and your profits. But as you grow, the tendency is to add more products, add more SKUs. And what happens is you're doing your bookkeeping right, you're doing it on accrual, that's awesome. You're looking at your profit line, every month you're profitable. But as you grow, you're not checking the profit by SKU. You're not carefully tracking that. And what happens is you end up collecting more and more dead weight products that are either just barely breaking even or even sometimes losing money, but you're not seeing it because you're just looking at your total bottom line and, hey, I'm still profitable, things are good. So what we do every time we onboard a client is we look at their profit, not just overall, but by SKU. And a lot of times we'll find that they've got some stuff they're selling that they probably shouldn't be selling anymore, or they need to get a better price from their vendor or raise their own pricing or cut their ad spend or something else to make it profitable again. And here's an example of an analysis we did for a client, where if you can see kind of in the lower right corner there, there's some numbers in red. Okay, so those are SKUs that are actually costing more than he's making. And as you can see out of the total here, that's about a third of the products he's selling that are actually costing him money to sell, which is just crazy because we're in this for the profit, right? Why would you, you know, you're making money for the manufacturer, you're making money for Amazon, and then essentially what you're doing is you're giving these customers a nice, you know, rebate on their product without meaning to. You're not charging them enough for you to make any money. So they're getting a great deal, but it's costing you. Now, here's the crazy part. Let's look at what the red is compared to how much more he has to sell just to cover for the red. So essentially everything below this red line is zero value. So he's making money on the products that are in black, but that's only covering the loss, the cost of the loss of the products in red. So essentially every SKU under that red line is all the time, the effort, the money, the investment is for zero return. Now think if he took that money and put it into those top SKUs or tried more SKUs that could be profitable. And this isn't, you know, this isn't a seller that was totally checked out on the beach with a laptop drinking Mai Tais. This was somebody who was actively managing and running their business and just didn't realize what was happening, because most of the products, 2/3 of the products are profitable. But when you do this analysis and look at it, you go, oh my gosh, if I don't really pay attention and really keep on top of stuff, things can happen that are negative for the business. And without, you know, that's what it kills me when somebody comes and says, hey, I'm a 7-figure seller, I haven't done any bookkeeping yet. I go, oh my God, you probably lost, you know, who knows how much money by not paying attention and not tracking this stuff. And I get it. Again, entrepreneurs, they love to be they love to find the products and do the marketing, come up with the branding and put it all together and see the sales come through. That's the fun part. This stuff is more of a grind, especially if you're not a numbers person. But boy, does it end up costing you if you don't, keep right on top of it. All right, last point here, enterprise value. This is a point a lot of people don't understand at first, but a lot of the value, in some cases, almost all the value in your Amazon business is actually in the business itself, not in the money that it produces. And here's just an example of a 10-year run of an Amazon business that started small and grew pretty consistently over the years. You can see the cash that they took out of the business, which was not much, because as you guys know, a lot of the cash the business makes goes right back into buying inventory. So even though you're profitable from a cash position, you've got a lot of cash that goes right back into buying inventory that you can't take out and spend on stuff that you want to spend it on, like vacations or, new toys or whatever else. The benefits of owning the business you don't get to realize. Over time, the profits significantly exceed the cash, but the enterprise value keeps growing. The only way to unlock that enterprise value number is by selling the business. And the only way to get the maximum value when you sell the business is by doing good accounting so that you can demonstrate the value and get the highest price when you sell. So there's another quick story. One of the brokers we work with a lot is Quiet Light Brokerage. They were telling us about a client of ours that they sold the business for, and we could back this up because obviously we had the financials. In 3 years of owning the business, the only thing that the owner ended up taking out as a personal benefit was the really nice camera that he bought for taking pictures of his products, right? Other than that, every single dollar went back into growing the business. Then when he sold the business, $900,000 payday. Awesome. But that was only because he sold the business. All the way along, he really hadn't taken any money out of the business. He had a full-time day job. So just keep in your mind that not only are you growing the business to be able to pay yourself something every month, but really the hidden value, the iceberg value of your business is the business itself. So you want to make sure you take good care of it, maximize the profit, maximize the growth, and then really think about how you might be able to exit down the road and how to get the best value for that exit. Here's just a different way of looking at it. You can see the lion's share of the value in the business is the business itself, not the cash that you take out of it or even the profit that it shows on the books. So just a mindset way of thinking about the business. Almost all the value in the business, and obviously it varies a bit depending on your profit margins and how long you've been around and how fast you're growing. But even in the slowest growing, least profitable businesses, most of the value is tied up in the business itself, not in the cash that you get to take out of it, because that is constricted by how much you have to pay to continue to invest in inventory. So here's a couple things, couple tips on how to not hurt that enterprise value. One is, not having bookkeeping. That immediately is going to hurt what you could sell it for. Two, you really don't want to commingle personal accounts in with your business accounts. That's going to detract from what somebody's willing to pay, because there's always the question of, well, how much, what's really going on with these books and this business and what you're spending in it. You also don't want to commingle multiple businesses into the same accounts. If you're only selling part of it, it's harder to see which piece goes with which. And then, like we mentioned already, cash basis accounting is definitely going to hurt the value that you can sell the business for. So avoiding those things is going to help your overall business valuation, which is the real sort of, that's the real value of what you're building, aside from any cash that you can take out of it. So to kind of wrap up there, next steps, if you go to capforge.com/Tom, you can download the free Amazon bookkeeper book that I wrote, so you can kind of learn how to do this stuff yourself, get a lot more information on how to do it right. If you'd like that free review and consultation, feel free to reach out. I'm happy to look at the books you have and let you know kind of our 2 cents on what we think is going right, what's not. If you're interested in signing up, we're happy to give people that come through this page from Tom 3 months of QuickBooks Online for free. And then, of course, the free copy of the Amazon bookkeeping book is open to anyone. So hopefully that was helpful. I know it's a huge topic and we covered it really fast. And so I'm happy to answer any questions that I can. I think, you know, it's a really important topic to get right. It's also something that a lot of people find really challenging and frankly boring. I mean, I know we're not sexy. Nobody's putting us at the top of their list because this is the stuff they really want to do. But there's a lot of consequence to not doing it right or not doing it at all. And not just, you know, oh, I feel bad that I haven't done it yet, but like actual dollars and cents consequence to getting it wrong or not doing it at all, that, you know, it is going to hurt you in a way that, you know, you've got enough other challenges in the business. There's no reason to give up money and give up opportunity by not getting this right. So hopefully, you know.
Yeah, that was super helpful. Thank you. And guys, if you guys have any questions about bookkeeping, please don't message me. I'm not a bookkeeper. So here's the contact info. Please email them and they can help you. Question about two questions. Earlier you said don't use A2X. We actually use A2X, so I gotta get that fixed up. But what are the two software? What are the software suite that you recommend us to use again for Amazon sellers?
So QuickBooks is the by far market share leader in the US. It's the most popular. It's easiest to find people who know QuickBooks and can help you with that. If that's what you use, it's also the platform we use. But the other option also is Xero. Xero is popular, especially in Europe, in Australia, New Zealand, and it also does a fine job at this. They're very similar programs. It's easier to find QuickBooks help in the US, North America. It's a little easier to find Xero help in the EU, UK, and other areas. So kind of depending where you are might drive some of your choice, but either of those two platforms is just fine.
Got it. So if you use QuickBooks, how do you pull the information out of Amazon then? Because A2X talks between Amazon and QuickBooks or Xero. So what do you?
Right. So what we do is we've got our own in-house process. We get view-only access to the Seller Central account, and then we go in and pull the reports we need. We put it through our own, essentially their Excel macros here with the information we need, and then post it into QuickBooks. It is a little bit more of a manual process, but the upside is it gets it 100% right. And that matters for two reasons. One is, when you get that 1099 at the end of the year from Amazon that says your total sales, they match to those statements that I showed, not the once every 2 week deposit cycle that is where A2X pulls their data from. And that's why A2X doesn't match, because what happens with A2X is, let's say for the month of July, they'll pull the data in the beginning of July that has a bunch of information from June, and then they'll have one that maybe is all of July. And then the next data that they pull is in August that has the last few days of July. And then when they're trying to report July data to you, they're cutting and pasting those different sections. But because of timing on when things close and when transactions are recorded, it never comes out quite right. It's always somewhere between, 1% and 3 or 4% off, which doesn't sound like a lot. And if you're just generally trying to say, hey, am I doing okay or not, it's fine. But we want our books to match exactly to Amazon statements and to Amazon's 1099. So if, like in the case of our client that comes to us and the IRS says I owe 75 grand, I want to have backup documentation to the T that matches exactly, so I can fight the IRS and say, hey, no, you guys got it wrong. Here's why it is what it is, and we don't owe you any money, and in fact, you owe us a refund. So with the A2X numbers, I could pull those in, but they don't match the statements and they don't match the 1099, and now I've got a different problem to explain, which is the same reason when a buyer comes along and wants to look at your business to potentially pay you a lot of money to buy it. They're doing the same thing. They're pulling those Amazon statements and they're comparing it to your bookkeeping, and they're going, well, you've got 305,000 in sales for this month. Amazon says you only made 295. What's up? What, you're putting fantasy numbers in here? Right. And then you've got to explain, oh, well, it's the software. As soon as you have that explanation, the value that they're willing to pay you has just gone down. So we want everything to match to different outside source documents. So anybody points to any number on our books and says, where did you get that? I can say, here's where I got it. Here's the source document. This is exactly where it came from. And they go, oh, okay, that's fine. I agree with you. So it just cuts down that whole question part about how did you get your numbers? I can show you exactly where I got every single number that I put on the books.
Understood. Okay. And then just the rough cost, like for your services, how much are we talking about here if a student's interested in contacting you? Just make sure it fits within their budget.
Sure. So our base pricing is $199 a month for taking care of the books for the entire month. That's pretty much us doing everything and virtually no time on their part. If you're super small, you literally just got started, you've got one SKU that just went in, you've had 10 sales, we can even come down from that down to 125 just for sort of a starter package.
Right.
And then it goes up from there. Our typical seller doing $1 million a year in sales is paying about $325 to $350 a month. So your sales can go up way faster than our fees go up because, again, if we're just adding some zeros to your sales, that doesn't take a lot of time. It's that baseline work that's sort of the starting cost that takes the time.
Got it. Got it. Awesome. Sweet. Well, guys, that was very informative. Obviously, there's a lot of information, but bookkeeping, accounting is a pretty big topic, and that's why I personally have an in-house CFO. That's why I personally outsource this part of the business to someone else professionally. And yeah, we've always had an accountant and this and that to get everything done because it's one of those things that you have to do. And it's one of those other things that if you don't do it right at the beginning, it's going to create more trouble. Trust me, I went through the first 2 years, I didn't do any bookkeeping. And when I was doing my bookkeeping and going back to all the transactions of the past 2 years, I literally wanted to just yank all my hair out. It was the most brutal and crazy. So if you do this right from the beginning, this is going to be a smooth sailing for you. If you don't do this right from the beginning, you're going to have to do it down the road anyway. So I recommend just doing it right from the beginning. And honestly, $100, $150 per month, it's very, very reasonable to get all this done from the beginning. So if you guys are interested, obviously here's the information. And yeah, thank you so much for your time, Matt. And I'm sure some of my students will be contacting you soon.
No, thanks. I appreciate being able to talk about it. It's obviously something we are passionate about. We enjoy doing, which most other people don't. So yeah. It's a good fit.
Awesome.
Thanks for the time.
Of course. Thank you.